How do you look at trades and decide what to do? What's a good setup for you?
The first rule is the good trade is a hard trade. The second rule is that I want to fade the short-term trend against the longer-term trend. The professionals would rather die than chase a market. So they will bid it, and they will bid it fairly low. And anybody that panics has got to get out of the bid. So invariably before the market goes up, it goes down first. Many people believe that there's somebody out to get them, but in fact that's rubbish. It's just professionals doing their job. The third rule is that I want to put my entries where the masses put their stops. Most people will put their stops at very predictable places. If you're an institutional trader, your job is to generate the liquidity to get into the position. You just can't press the button like us. So invariably, the market makers will not know where the stops are, or they couldn't be bothered to find out. But they know that most people will put their stop a tick or two below the last low. And invariably, the market will go to where the obvious stops are over and over and over again. So rule number 3 is I want to put my entries at the obvious stops.
Be happy with losses. As soon as you say losses, the word loss, I mean, it's like people want to leave the room.
Even if you said to someone, I can give you a strategy which has, I don't know, for argument's sake, a 60% success rate, and they would be happy while sat in this room with you, saying, yeah, okay, I'll be happy with that. As soon as they go through, those losers, that's it. Then they start to hesitate and they start to second guess and make all of those decisions, which all of a sudden makes them underperform the strategy. So you've got to accept taking losses. Don't get so all encompassed in that one trade that you're taking right now. This one trade you're taking right now is just one trade in the next 1,000 trades. Try to put it in perspective and actually minimize the importance of the very next trade that you're taking. And it's all those sort of little tricks that a trader can take to help at least. It's easy for me to say it. I've been there and we've been there trading for years. But at least if they make some little notes of this sort of thing, then it might actually help them.
Traders always want to know, how much can I make in trading? What's your answer?
Well, what's my answer? Jesse Livermore parlayed a couple $100s to several $100 million. That's 100 years ago. Richard Dennis from the 70s until the mid-80s parlayed $400 to $200 million. So the answer is you don't have to start out with a lot to make a lot of money. Now, it's interesting. Both of them had the advantage or ability to work in a very inefficient market. So the question, therefore, is can you find something that allows you to double up your position size and take the risk? Because you're not going to get there if you don't. Number one. And number two, going back to what we said about Buffett, you need to take income and put it into your trading. That's the only way you're going to accelerate growth. People who think that they can just take an initial sum of money and increase it, it's not going to happen. The best traders out there, they take external cash and constantly pile it in to amplify their growth.
Now, here's the thing. If they say trade up to your emotional, trade up to where you're feeling, a little emotionally shaky about it, or up to your level of discomfort, is one sometimes said, right? Well, I put this to you. If you are trading to your level of discomfort, you are trading your emotions and not your system. Because it's determining then your positions. Manage your emotions is another set of skills different than today. It's also something that's easily attained through NLP. The point is that once you have where you just can look at it and do it, then it becomes a question of, well, what is it that you're doing in terms of high-risk decision-making? He says, you're in the market or you're out of the market. There's no difference. So then it becomes a question, well, can you do something with this? And the answer is yes, you can. You could actually shrink down the size of those larger trades and make them smaller. And then you go, well, why do that? It makes it less important. Well, that's the idea, because people have this idea, if something's important, then if they yell at themselves, they'll make better decisions. And I found it's never the case. It's rather when people can handle something, when it's a size they can do something about, then they can bring their skills to bear on it. Another is that they'll put it up here in their mind's eye instead of moving it down here where it's something that's more equal to them, something they can deal with.
First off, during the trading day, the number one rule you have to keep in mind is the less amount of decisions that you can make during the trading day. In other words, the more things that you have thought out before that day opens, the better off you are. You don't want to be having to make multiple decisions during the trading day. So very first off the bat, you must have your unit size predetermined. Are you trading 5 lots? Are you trading 10 lots? Are you trading 2 contracts? So forth. I firmly believe in deciding on your unit size and keeping an even bet size, because I don't know in advance which the good trades are and which the bad trades are, and invariably if I start doing a 2 lot where it's scariest, that'll be the winner, and if I do a 10 lot where it looks like it's a slam dunk, that's going to be the loser.
If you can master your mindset and discipline yourself, which is an extremely difficult thing to do, because even having been trading for some time myself, when I find it difficult to sometimes to stick to the discipline and the rules. So if you can achieve that sort of discipline and mastery over your mindset and your psychology, i.e. dealing with losses, dealing with profits, market movements, etc., etc., then I think you're en route to becoming a good trader.
I have the sense that there's lots of people who come into this trading space with unrealistic expectations about how long it takes to learn and what kinds of returns you can make. If you can make a few points above the market return, then you're doing really well. And yet, constantly, I come across people who are spending money on course after course after course, and you have this sense that, maybe it's a bit like Scientology, that I've got to this level, they've let me inside this, but if I can only get into the inner sanctum, someone will tell me those secrets which will allow me to make a few trades and suddenly have a Lamborghini. Doesn't work like that, but I think that's the dream that some people are buying into, and the truth is there's a whole ecology of people out there who like to promote that dream and take money off you in the process. So is it possible to make money as a day trader? Some people seem to, and some people seem to consistently. They're very much the minority. Is it possible to learn to do that? Possibly. Some people seem to have. Those who are making money very often will have learned their trade inside an investment bank, right, by the way, or may have other kinds of advantages. Are there any shortcuts? No.
So, what size account do the most profitable traders have?
The size of the account actually makes no difference to the profitability of the client. Absolutely none at all. You can be successful percentage-wise with a small account as you can with a big account. The difference is your pain threshold. If you put £1,000 down and that's your only £1,000 in the world, the pain threshold is very intense and very near, and it makes you do silly things. Whereas if you're a very wealthy person, let's say you put £200,000 in with your spread betting company, you've got £5 million sitting in a bank account somewhere, fine, you don't want to lose the 200,000, but your pain threshold is not quite the same. It doesn't really matter to you even if you do lose the whole lot. So it just depends on how people trade, but fear is the big problem, and if you fear to lose it, then you probably will.
Most people, when they trade, they think about the outcome, but success is not built on outcome. Success is built on process. What we're looking for is not perfection, but gradual improvement. So I'm just following the process every single day, and the outcome will just come gradually, like you're building a company. You can put on grand visions of where you want to be in 10 years, or you can just focus on doing the right thing every single day. That's how you build success in any endeavor. As a human being, you become a little bit of a better person every day. You talk a little nicer to your partner. You're a little nicer to your kids. It's the small steps, because human beings have a tendency to want to make big changes. But big changes are very hard to maintain. Small, gradual changes, they are much, much easier to implement.